Okay. All right. Let's get started. So what I'm using here is TC 2000, right? Um, I'm using TC 2000, and the chart that I have here, which I think I sent to many of you, it's a chart that I use, with different colors. And I think the most important color is this purple one here, right? These candles, what it is any stock that within the last 40 days, you can change the numbers to 40 days, 21 days, 63 days, which covers the whole quarter, but I usually use 40 days, which is about 2 months. It's any stock that on any given day, like for example, here, and here, the stock was up 4% or more on three times the average 20-day volume. So let me just go here. So as you can see here, 4% or more on three times the 20-day average volume within the last 40 bars. Okay, I had a little price history above one. And the average volume has to be a little, over 100,000 shares, right? Um, and then, and obviously the red candles are for red days and the green candles are for the green days. And right over here, where my mouse is, this is the rolling 5-day watch list. And if we go to the watch list, you're going to notice that almost every single candidate this week uh, had these purple bars, came from this scan, right? Which I believe that the scan um, is that one scan is going to produce the biggest short-term winners as far as percentage-wise in the short term within our time frame. So if you take a look at, for example, Sarah SERA was a nice one that we had right over here on 1218. Again, here's a purple candle. Traded 78 million shares on some type of news. I forget exactly what it was, but that's what normally happens is that these candles normally come out on stocks that have been dead for years, for 1 to 2 years. Stocks have been normally at 52-week lows, and then suddenly what happens is the news comes out and you get this major move, right? Once you get this major move, you're not going to catch this first day move. Just because if you do, it's probably because you're lucky or because you held on to SCRA for a long time based on the story. A lot of people will get involved here and day trade this move. Um, they'll use, for example, the 15-minute chart, and it's the same exact thing, right? You're looking for consolidation, you're looking for tightness, like right over here and right over here, if you're looking to do it on an intraday basis, right? So that's SERA. There's a big purple candle. VRCA. Here's a big purple candle. Um, and then you have to wait for the setup. So if you go on a daily basis, on a daily chart, the setup might not come in, depending how aggressive you are, might not come in until days and days later. That's the reason why I use within the last 40 days. So that way that allows the company to, like a VRCA, something like this, that just had a big move as a biotech stock. Normally, when a stock like a biotech makes a big move, it's usually based on some type of news. They typically right away do a secondary offering over the next couple of days, and then the stock tends to consolidate and then tighten up a little bit. But if you wanted, again, if you had time, right, and you can do this during the day, then you can actually have a lot more setups if you go on the intraday basis, right? For example, here's an intraday of VRCA. Here's where it has those big moves. This is a 30-minute chart, and then you can see here inside day on very low volume, down three candles in a row. So you have a few more setups, but then you have to be a lot quicker, which I don't know if that's suitable for most people. RDHL is another one. Here are the purple candles. Here's where it gets, really tight here, down 3 days in a row. Tight, tight, tight. This is where we got involved right over here on 1218. But again, the significance of these candles. This was a short shot, same exact thing. Here are the purple candles. And then here it starts to get tight. This is a yellow candle, is an inside day. The blue candle, it's an inside day on the lowest volume in the last 10 days. And that's significant because if once you start studying these big winners, you're going to realize that after they consolidate for 10 to 15 days, what you have is a price contraction and a volume contraction. At the very end of that consolidation, the volume tends to contract. These are the blue little candles right over here. But again, here's, it goes up. You get all the day traders here involved. It goes up huge. It goes down big the next day. And then it starts to tighten up a little bit. That's when you want to put it on your radar. But again, here's the purple candles. TUYA. This one did not trigger, but it's going to be in the list on Monday. But here are the purple candles. PRQR, same thing. ICTT, this has not triggered for us, but again, it's on watch. It'll be on the list on Monday going through this high right over here. Here are the purple candles, 21 million shares, 56 million shares, okay? ITRM, and again, they're not all going to work out, right? But we're going to get to why we want to use this scan. And you're going to run into some issues with the scan. Some of these stocks are very low float, liquidity issues. If you have a big account, you might have a hard time filling up the accounts with these stocks because the stops have to be wider, number one. And number two, they're just a little bit more volatile on the way up and also on the way down. And if volume dries up, then you might have an issue. HARP, H-A-R-P, here's the purple candle. Here's another one. Again, it goes up. You're going to miss all this unless you trade around it in the 30-minute charts. It's not something that I like to do. But here's when it starts to tighten up. Here's an inside day, and then it has a nice move from here to here. AVH, right? And there were a bunch of these, ATOM. And right now, what's working right now is the heavily shorted names, right? Number one, some of the Bitcoin stuff is really taking off now. That at some point is going to come to an end. CECO is another one. Here's a purple candle. THCX, here's a purple candle. So, and the list goes on. GREE, same thing, right over here. SSNT, right over here. Blink, which was up nice in the aftermarket, up to 380, right over here, right? So what we're going to do is go to the universe of stocks, right? And if you have TC2000, you can do this. So I'm going to, let me just duplicate this right over here. This gives me 3,367 stocks. Price above $1.50 a share. You can change that to $1 but whatever, $1.50 a share, just leave it as it is, right? And what I'm going to do is I'm going to go to the first quarter of the year. Right, and I'm going to go to tools. I'm going to do custom date sort. And I'm going to start 12-1-3, and I'm going to end this little study on 3/31. Okay, so now sort, no, okay. So now it's going to give me the biggest winners within that quarter. Let me just change this, make positive colors, green, and negative color red. Okay, so it's going to give me the biggest winners within 1/3/2023 and 3/31. Okay, and the reason why we're going to do it on a quarterly basis is because some of these stocks maybe went up huge in the first quarter and then they just died out afterwards. So when you do a year-to-date basis, it's not the same. So let's just go over them within that time frame. Let's go with BLPH. Okay, so here's BLPH. Here is, the recent years, 2021, again, 52-week low. Something happens here. The stock is up well over 4% on 59 million shares. That's the purple candle. It must have been some type of news. And again, it starts to tighten up. For me, as of right now, these little short-term consolidations, I think it's a little bit more riskier. And if you're going to go and fool around with these stocks within the first 5 days, I think you have to use the intraday charts, whether it's 30 minutes or the 60-hour, okay? But the point is that here's a stock. There's a purple candle. And then when you're doing these studies, you want to make sure that if you believe that this was a setup, you see how tight it looks because of the candles right ahead of it. You have to do this, right? And then say to yourself, okay, is this something that I would have put a buy stop in, right? And then you can go bar by bar, bar by bar. So in my opinion, this stock probably gave you an opportunity to go long. Let's say if you really short term, right over here, this didn't work out so well. Maybe here, but right over here. Okay. And then we're going to stop at 331. And then maybe right over here, a nice little inside day, which is, you know, one of the scans that we look at every day, right? So what you want to do with these things is you want to make sure that, okay, you know, a lot of people talk about scans and they talk to you about everything's after the fact, but can you actually use that scan and replicate that same thing over and over again, okay? So right now, number one, we have the first best performance stock had a 4x3, which is, again, volume, 4 times the average, up 4% or more on 3 times the average daily volume. Number two, sticks. Here's the purple candles, right? So it would have came up in that scan right over here. You probably had an opportunity right over here down 3 days in a row. And again, what you want to start doing is you want to start looking at charts, not that old-fashioned cookie cutter way, which is, hey, the stock hit 45 3 months ago, and so that becomes resistance. So you buy it, you know, 10 cents above that prior resistance. That's not the way it works, right? So you want to look at charts from where are these moves starting from? Okay. Where are they starting from? Are they starting? Is this move going to start here when it gets above 250? The answer is no. It started here. And once you start going through charts, you're going to be able to write your own scans based on the way stocks actually move and not say, okay, my buy stop is going to be 5 cents above this, right? This prior resistance. And this is what people actually do, right? Without taking into consideration that the stock just moved almost 100% to get here and they blindly buy just because it broke resistance. This matters. This is up 100, almost 100%. Right. So there's there's the 4x3. And some of these stocks are going to give you an opportunity to get involved. Some are not, but most will at some point are going to set up and give you a low risk entry or a tighter entry. Okay. But the important part is here's that candle. So that's stock number two. NZ, same thing. Stock trading near a 52-week low. Here are the purple candles. Right over here, stock trades 648,000 shares. Doesn't seem like a lot, but it is for this stock. But here is where it tightens up. Right. So here's a big move. Again, from $1, this is a double. And then it goes sideways for it goes sideways for 16 days. Okay. And then this to me is a good entry going above 185 with a stop right over here, right below this yellow line, which is a 21-day moving average. Okay. And then there is the move, your whatever 2 or 3 day move. And basically, this is what we're looking for, right? This is a significant move here in the short term, 61%. You're not going to catch 61%, but you want to sell on the way up. But again, here's stock number 3 coming from this 4x3 scan. Number 4, AMAN. This is one that we played. Here's the big news. Stock is trading near a 52-week low, only trading roughly 13,000 shares here. News comes out, whatever the news was, some phase 2 trials. And then the stock goes up. They probably did a secondary offering. You get the day traders back and forth, back and forth. Here, the stock starts to tighten up. Here's where I bought it. Inside day through this high. All right, this was 1.9 long, 110 at 233. Here, this is roughly a 27% move. And then all these candles is where I bought the stock again. And again, this scan is not going to produce all winners. You're still going to be wrong, whatever it is, half the time. But the point is that the scan is going to put you into stocks. It's going to make you look at stocks that have the best chance of being the best percentage performance in the short term. Okay. So as it goes, has another move higher. Again, probably some type of, news in regards to some trials. And you shouldn't be afraid to try these again, over and over and over again, because again, as we are now going through this list, this is stock number 4, and all 4 have the same thing in common. Some of the same commonalities, which is stocks trading near 52-week lows. Some big candle shows up on heavy volume for whatever reason. It changes the character of the stock, and then it gives you an opportunity sometime down the road. The opportunity for me normally comes from tightness, inside day, or down multiple days in a row. Okay, so here we are. Another big move. Again, and if you go to the 30-minute chart or the hourly chart, you're gonna see more setups, and it's all gonna be the same, right? It's all the same concept: inside day, inside candle, down 3 days in a row. And then here it gives you another opportunity right over here. It's a nice little inside day, decent risk reward. Another one right over here. This is the much better one, right? Because this one's coming in at roughly, it's coming in 25 bars later, inside there on the lowest volume. You could have put a stop right over here somewhere at 828, and then you had a nice move. Okay, let's go to GNS. Same story. 52-week low. Here's these purple candles. Look how not choppy, but look how volatile it is. Some of these things are going to be extremely volatile. And like I said, they're probably not, some of them are not going to give you an opportunity, but 90% will. The opportunity for me would have been right over here, down 1, 2, 3 days in a row, inside candle. The buy stop would have been above this candle. It never triggered. Okay. And then that's about it. As far as March 31st is right over here. So no more opportunities. But again, it comes from that same scan. UNCY, same exact thing. 52-week low, no volume. There's the purple candle, big up days. Might have given you an opportunity right over here, right by the 21-day moving average. Right over here, this would have been a loss. But again, it's giving you stocks that are in play. DHGI, similar scenario, 52-week low. Here's your scan, right? Here's a purple candle. And then you might get an opportunity as it tightens up, maybe right over here. Any questions so far? Okay. So do we get the point? Are you guys seeing what I'm seeing? Yes? No? Oh, yeah, this is chat. I'm sorry. Okay. Right. So right now, the scan right now, which is, let me duplicate it. Right now, this scan has a lot of names. It's 1,000. It has 1,040 names, right? If I put this down to 25 days, it's going to have 698 days. Okay. Um, so you can do, what I do. I'll go through the whole list, right? I'll go through the whole list every day. If I wanted to narrow down this list, I'm going to narrow it down based on normally what type of candle setups do I buy. One of them is inside day. So here I can do this and look at all the inside days, to see if this is an inside day that I want to buy. This one is going to be on the list on Monday. Okay, here's the big move. 225 million shares. They have a deal with Merck. I had a buy stop on this on yesterday, did not trigger, but here it is, right? So I can just narrow down the universe based on inside days. I can also then narrow down the universe based on stocks that are down 3 days in a row or more. Let me just do that. Condition 3, down 3 days in a row or more. Okay, I can narrow down the universe based on that. And it's going to spit out all the stocks within this scan that are down 3 days in a row or more. I could go even further and say, okay, I only want to get involved in stocks that have some type of consolidation or are trading within 4% of their 21-day moving average. I can change that average to 21 days. I can change it to 10 days, whatever the case may be. But if I do that, it's going to give me, it's going to narrow down that universe. I'm sorry, that's the wrong list. It's going to narrow down that universe from 1,040 names to roughly 236 names. Okay. And then that's going to give me all the stocks. This yellow line here is a 21-day moving average that are very close to the stock. Okay, so this one traded 17.8 million shares, Paramount Global. Here's a 4x3. Here's a setup. You go through this high right over here, 1530, stop right over here. Okay, JVR. For some reason, doesn't show up the 4x3 here, but no, we'll pass on this one. SABA, right? Not all of these are going to be set up, but they're going to give you stocks that are somewhat within their 21-day moving average. Here's Troop. Okay. And this is also how you find bases, right? I'm looking at the stock, and look, the stock's been trading between 20 and 30 for the last, call it 7 months, right? And now it finally broke above that base. If you believe in these measure moves, this the stock was trading low end 20, high end 30, target is 40. Here, the buy stop is a little too far for me. It's at 32.28, but this will be on the list maybe some point down the road, and I'm also going to copy it to basis. But let's get back to what we were doing. Let me duplicate this one more time. Let's get back to what we were doing. So that way you can see the reason why we're using this scan, and within the holidays, you can actually try this on your own. So that way you get comfortable with whatever it is that we're doing. And you can start doing this on your own. And now, again, what's going to happen with some of these stocks, that liquidity might become an issue, right? Things are a lot quicker with these names than they are with the bigger cap names. The bigger cap names do not give you these same opportunities because they just don't move that way like the smaller caps do. Okay. So let's go back here. Stock universe. Why is this giving me different stuff? 1.3 to 331. All right. So NZ, we're going to go through the whole 50 really quick. There's the candle. AMAM. There's a candle. Here's the purple candle. Here's the purple candle. Candle. Here, here, here. All of this. There's a candle. Riot. This is the first one on the list. Number 10 that did not have that type of move. That 4x3 move. Okay. That's just 1 out of 10 so far. SERA, here's a candle. Here's a candle. And again, what we're looking for is that at some point within the next 10 to 15 days, or maybe even later, they're going to set up, like, for example, here, these yellow little arrows is where I bought the stock, right? Now, multiple days in a row, down 7 days in a row through the high. Here's a candle. Here's a candle. Here's a candle. Here. 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 There too. There's another one. There's another one. I'm going to go really quick to the top 50. Oh, here. Okay. Here's another one. Oh, here's a candle. Here's a candle right over here. Here are the candles. Here are the candles. Here's a candle here. So far we've gone through 33 names and only one did not have that one power move, whatever you want to call it. So this is a scan that, right, that if you really wanted to narrow down the universe based on the short-term time frame, this is the scan this is the go-to scan. And again, it's not going to reduce the losers. You're still going to have them, but it's going to put you in a position to get involved with the stocks that move the most in the short term. And the key is, to get involved when they trigger and get involved again if for some reason you get stopped out. Okay. And again, some of the issues, I mean, this is CBNA, right? Carvana, right? Here's the inside day, got involved. Here down multiple days in a row, back to the 21 day, got involved. And then you can see the setups. Here's another inside day right over here, good risk reward ratio. Right? Here's another inside day. And again, you want to look at these charts is from where are these moves starting from? That's the way you want to start looking at charts, okay? SOUN, here's a chart. Again, this is really hard to get involved in these moves in the short term because you have to be ultra fast. And then you have to narrow down, you have to go from daily to intraday. But at some point on a daily basis is going to give you that opportunity when the stock starts to tighten up. And this is, if you look at all the old videos that I have in the room from 2017, it's the same story. Same song and dance, okay? Sometimes they're going to work better than others, due to whatever the market conditions. But the point is, if you wanted to narrow down your universe of stocks and only wanted to focus on what could potentially move the most in the short term, this is it, okay? If you run into problems, whether it's liquidity issues and your account is too big for some of these small stocks, then you're going to have to do the same homework on your own and then change the universe from all stocks to just maybe the Russell 1000. Now, that's not going to give you the same opportunities. You're going to have to figure out what's making those stocks, those biggest stocks, move in the short term, right? But this is the way you do it. Any questions? And again, I can go randomly. I can go let me just go back all the way over here. Just random. Let's just go from here, from this high, custom, and let's end it here in October. Right? The S&P was down 4% within that time frame. Sort. Let's go here to the biggest winners within that little time frame. IVT, no volume, LPTX. Here's the candle. AHER. Here's a candle. Here's a candle. Here's a candle. This is within the same time frame. Neon. Here's a candle. Here's a candle. CRVS. Here it is. Okay, long inside day, 11.3, is that over here? Yep, right over here. XENE, here's the candle. Here's a tightness, inside day, all very tight candles on low volume. CPE, here's one without the candle. That's a bigger name, oil name. I think the oil stocks were in play back then, right? So then once you go and you change the universe of the higher cap names to meet your liquidity needs, or maybe even your comfort level. Some people are not comfortable with these little small stocks. They're just not in them. So you have to change the universe to the bigger cap names, but then you have to figure out how do they move? And can you actually create a scan similar to this one, to the 4x3 scan, but you have to, can you create one based on way, those stocks move? And I have a scans for that. I don't use it as much, but I do, right? Because these big caps don't move 4% in one day on 3 times the volume. They just don't happen that way, unless, of course, and when they do happen, it's normally because earnings came out, like for example, ESTC, NTAP, and a few others that just NTAP. What's the other one? PAF. and a few others. But either way, let's go back here. GTE, here's a candle, here's a candle. CRK, again, no candle. Oil sector was hot during that time. BTE, energy name, but smaller name. Here's a candle. VET, same thing. No candle, but the energy sector was hot during that time. Biotech stock, no. METC, here it is. AMR, no candle. This is a much bigger name. Maybe there's a candle right over here, this purple. But this was our time frame for this study was right over here. So there's no candle, but this again, the commodity sector was hot during that time. VTE, oil sector was hot. Here's a candle. NCMI, no candle. AMTX, oil name again. The sector was hot, no candle. CCLP, oil, but low. It's a lower price stock, so there's a candle. NRT, here's a candle, lower price stock. SBO, here's a candle. So the point is that you can do this all day, every day. You can go to any time frame, and you're going to start to notice that 90 to 95% of the stocks that make the largest moves within that short-term time frame, a quarter, it's going to be based. You're going to find those stocks within that scan, right? So over the last week or so, I just decided hey, I'm just going to 90% of them. I'm just going to go and just go through that list, and that's it. So almost every single name on the list for this past week came from that scan. Sarah, RDHL, right? Even the ones that we bought recently, BITF, Blink, BMA, Fubu, HIMS, IoT. Here's the big ones. IoT, right? It's a much bigger name. This is based on earnings. Lean, here it is. MDB, again, here it is. But again, these are all based on earnings. Newegg, here it is, and SYM, there it is, right? So you can make things extremely simple. And sometimes we overcomplicate things. And when you're going through some type of rut, you should narrow down everything and make it extremely simple. Just say, hey, I'm only going to focus on this scan, right? And then you can take it a step further and say, not only am I going to focus on this 4x3 scan, but I'm only going to look at the stocks that printed an inside day within that scan. Or I'm only going to look at the stocks that are down 3 days in a row or more within that scan, right? And that's what I have here. For example, when I go to here and I'm looking at my inside days, looking at the inside day stocks that are within the 4x3 scan, right? So here, IPDN, IRS, Penn National, CANO, BMA. So from here, we can go and say, hey, I'm going to look for the tightest setup that gives me a decent risk-reward ratio, okay? And so far, for Monday, you have you have 92 names with they're printed in inside day from the 4x3 scan, right? For Monday, you also have, here are the names within that scan that are down multiple days in a row, that being 3 days or more. You have how many names? 92. You have 17. So 92 plus 17, you have 100 and whatever, 4, 5, 6 names that meet that little small criteria, and you can make that your list for Monday. And then from there, you narrow it down based on the tightest setup and which one gives you the best risk reward ratio. Not risk reward. Sometimes some of these stocks that look good, but maybe the buy stop is too far away, so you might have to pass. Does this make sense? And then once you have this, right? Once this is the scan, but then the hard work comes in. The hard work is, putting the orders in, money management, cutting losses, buying stocks back if for some reason they fail and then they come back. I sold some GREE on this day, bought it here through this high, sold some here, and I almost bought more yesterday, added everything back. The only reason why I did not was because I wanted to just diversify and buy different things. But again, some of the best winners are the ones who just recently got stopped out. Right, I bought Fubu again yesterday, and every time I bought the stock, it goes, but it comes right back in. It goes and it comes right back in. But again, here's a scan, right? So it's got that going. 18% of the float is short. So now shorts are covering across the board before the year end. So it's got that going. And it's been trading sideways for about 1.1 years, a year, a little over a year. Right. And you can see here what happens within the base is that when you have a basis, here's Fubu, right? Let's just go back here, just tell you exactly what the base means, right? So Fubu made a big move and then it goes down. And you can see that every time this stock hit the 21-day moving average, which is a yellow line, and the white line, which is a 10-day moving average, it found sellers, right? So that you just had a constant seller there, right? Who probably gave an order, a big order to whatever, to his trader, and said, hey, every time it gets it, just sell, 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 sell. So then it sells, it's selling nonstop. But then eventually it gets to a level where the selling kind of like dries up, right? Either the guy's running out of inventory, or you have a buyer who's starting to step in and starts to suck up all that supply, right? And that's when you start forming that base. And then once you form the base, what typically happens right before you get a base breakout to the upside is that the buyer no longer wants to wait to the bottom of the base to start picking up shares, right? Either that or the seller again is running out of inventory and you start to get a pattern of higher lows. Here's I'm pointing at the screen like you guys can see. I mean, here's the low, higher low, higher low, higher low. At the very end of that base, the stock no longer wants to go to the bottom of the base. You see here, now the 21-day moving average is holding that support. And it starts to tighten up here. And this is normally when it takes off. It tried a few times here, but they've taken it right back in. But again, we're at an 18% short interest, and things going the way they're going right now, it's got a good shot of going. Okay. Same thing with Blink. Similar situation, 30% of the float is short. Okay. So if we go back, and I'm going to change this to Universe, let's go to High Cap 1000. So we go back and then we change the universe of stocks to the Russell 1000, the bigger names, and we're going back to the beginning of the year, which is right over here. All right, here's BBIO, big candle on March 6, 2023. It does whatever it is it's got to do. Secondary offering, it gets really sloppy back and forth. Day traders are involved, but then here it tightens up. 412 longs, 1562 through the previous day highs, 4x3. So that's stock goes down to the 21-day moving average. I put my buy stop right over here. It's got a small move, but didn't work out. Okay. But there's a 4x3 candle. CBNA, we went over this one already. Multiple candles where the stock went up huge, and it gave you different opportunities across the board. Mr. Bitcoin, here's the candle, right? This is a little bit choppy, higher price stock. Coin, COIN, no 4x3 here. Okay, this is a much bigger name. Dual right over here. But again, doesn't give you much of an opportunity unless right over here, this inside candle, all right? But they don't, for some reason, NVIDIA, no candle, these stocks are not as clean as the smaller names to be. They're just not as clean. Tesla, same thing. ONON, here's a candle right over here, the big one. Gives you an opportunity right over here, inside day candle. But they're just not as clean. DKNG, here it is. Here's an inside day candle, long 1816 inside day through high 4x3. Here's another opportunity right over here. Meta, here it is. You probably had an opportunity here. Again, these are not as clean. So with the higher cap names, you just have to go through them and see for yourself what's driving these stocks. It might be news. It might not be news, okay? But this is a little homework that you have to do yourself. I have a similar scan, which again, I have not used. I barely use it. Normally when I go through the big cap names, I like to use a scan hugging the 20-day, which means they're within 4% of their 21-day moving average. I'm looking for tightness. But here, a similar scan would be any stock that's up $3 or more during that day on twice the volume. That's a little white cone right over here. It happened here. It happened here, right? And it also happened here. These stocks are all. This stock was up also 4% or more that day. IoT. Here's the purple candle. MNSO right over here, right over here. So you can see the same thing, just not the same opportunities, and they're not going to move as quickly. Do I get short interest from TC2000? No, I don't get short interest from, no, I get it from Finviz. Finviz, FINVIZ. You can go to screener. You can float short, over 20%. It gives you 143 names. Okay, if you pay for Finviz, you're able to export it. It will export to, you will be able to export it to an Excel, right? You can do that. Normally, like I pay for Finviz, and I don't like before you were able to copy and paste right into TC2000. Now you have to export to an Excel and then copy and paste to Excel to TC2000. Sometimes I just sit down and just start going through the symbols, like for example, go one by one, AOI, right? Right. So now AOI, right? Inside day on the lowest volume in the last 10 days. What's the short interest in this? Oof, 27% short. Right? Here's a 4x3 within the last 4x3 happened 27 days ago. So this is going to show up in the inside day scan that we were just talking about. Okay, 27% short. AER. So you can do that, right? And you can even click on charts. And you can get an idea like this. I can eyeball this and say, okay, I have an interest in this one. This AEHR looks like it's been consolidating for the last couple of days. Let's look at that. And also AIRS. Let's see. AEHR. Again, not bad. Inside day on the lowest volume day in the last 10 days. ARS. Okay, so here, AEHR, 20% of the float is short. Right. So, that's another thing, right? If you have a theme that's working right now, you also want to focus on that, right? So when I went on Friday, and I know the Bitcoin stocks are running, what I did was I went to Finviz and I typed in Bitcoin, and it gave me all the stocks that have in their profile Bitcoin. So I went through all of these, each and every one of them. BITF, high tie flag up 100%, going sideways for the last 10 days. Went through the high inside day long, right? But you have to go to Finviz. You can jot these things down when you're on. Again, that's what I did. I put all the names here, 10% short of or more. I put all the names here. And there are 615 names. I can just go through them one by one. TPIC came from that list, 4x3, 18% short, double inside day. We went long on Friday, up 20% for the day. Okay. So you can start adding those, putting those things together. Again, the short interest stuff is working now because year end, market is up. The quant funds that were heavily short, whatever certain names are getting destroyed, they have to cover. Right. So this is not always going to work, but you can start putting things together. And it's just a good way to narrow down the universe. So you can narrow down the universe based on what works best within your time frame, which is what we're doing with that 4x3 scan. You can narrow down the universe based on themes. What is working now, right? What sector, whether it's Bitcoin or the heavily shorted names working, or the meme stocks working, or the bio stock. You can narrow down the universe that way, right? Instead of like doing your studies like, back in 1957, the best performing stocks were all, above $15 a share, and they made $25 or what their quarterly sales were up 25%. Right. If I start to narrow down the universe based on those beliefs, then I will come up with a different set of names. I'd rather narrow down the universe without many filters. So that way I can see what actually is working besides me putting all these different filters. Any questions? So I'm going to spend some time and go over the best performing stocks on a quarterly basis. I'm going to change the universe to the high cap names to see if something new has come about. And you guys can do the same thing. Right. And it's got to be something that you can replicate over and over and over again. We can't start, we can't look at something. No, this one stock, this happened, but you can't find it. You can't replicate that over and over again. If you can't do that, then it's not a good scan. Right. It's no different. You go to the basketball gym, you're not going to practice, taking shots from the foul line on the other side to, that one buzzer beater. That just doesn't happen too often in the game or in the season for you to practice that shot, on a consistent basis. We want to be able to do things that we can replicate easily over and over and over again, so we can get the turnover and the volume, which is what needed, which is what is needed to grow the account. That's one way to do it. Okay. If there are no questions, then I'm going to wrap this up. Okay. And then hopefully you guys can do some homework over the weekend. Now you know where to get those heavily shorted names. You can narrow it down by 10% float to short, 20%, 25, whatever the case may be, and look for tightness. And now once you have that, you can start sharing some of your recommendations, some of your picks. And look, it's not their ideas, right? Don't think no one's going to hold you to it. If you say, okay, this is on my watch list, and then it goes down, that's part of the business. Stocks are going to go down. You're going to lose your money, and you're going to be wrong half the times. Okay. So trading well, be well. Happy holidays. Have a great weekend. I'll see you guys next week.